Hello. Hello everybody. Welcome to EduTap. I hope you guys are doing absolutely good. So, welcome to this SEBI Grade A 2025 Phase 1 Paper 2 Marathon for Commerce and Accounts. Am I audible, visible to all of you in the YouTube? Please let me know in the chat box so that we can start with our session. A total of 100 questions are waiting for you to solve and to test your concepts. Am I audible? Yes, so I have received a signal. Thank you so much. Now let's start with this marathon. I hope you all will give me the correct answers of the 100 questions, which today I have from multiple chapters of Commerce and Accounts. Okay, before I begin, this particular video is for your revision purpose, and I hope you will use the maximum benefit of it. Let's start, but before I start, please subscribe to our YouTube channel. On our YouTube, you will get multiple insightful videos, which will help you to enhance your knowledge. Moreover, the PDF of this particular PDF of this particular session will be available to you on the Telegram channel. The link of the Telegram channel is given in the description box below. The PDF will be uploaded in 24 hours. So by tomorrow 5 p.m. the PDF will be uploaded, which you can definitely get and solve questions. Right? Let's start. First of all, a brief introduction for the first 20 questions. So the first 20 questions out of total 100 questions which I have today in the marathon are from 4 chapters: Introduction to Accounting, the basics of accounting I mean, then Principles, which is the theory base of accounting, then Recording of Transactions, Subsidiary Books and Journal and Ledger. So first 20 chapters are dedicated to these, first 20 questions rather are dedicated to these 4 chapters. I hope you will answer them in the best manner. Let's start. Question number 1. And yes, the level of the marathon is easy to moderate because this is a phase 1 paper 2 marathon. This is phase 1 paper 2 marathon, right, wherein the level is easy to moderate. So let's start solving the questions. Question number 1 is on your screen now. I am good. Thank you for asking. Question number 1 on your screen. Which of the following best explains the reliability of accounting information? Now, every now and then, if you see year 2020 to 2024, they are asking questions on the characteristics of the accounting information. So first 2 questions are based on characteristics only. I am looking for the answers for question number 1. Which of the following best explains the reliability? Reliability means that I can rely on the information which is being provided to me as an accounting user. So option number A is it is free from biasness and it can be verified. It helps in comparing performance between the firms. It is for easy to users to understand. It is relevant to make decision making. It is presented in a numerical form. So which of the following explains reliability? Yes, the correct answer will be option number A. Reliability basically means that I can rely on that particular information, and that information should be free from errors and it should be free from biasness, right? So answer will be option number A. But there are some more quantitative characters or qualitative characters rather. The characters goes by like this: understandability, you have your comparability, uniformity and whatnot. So I hope you are aware of all those qualitative characters because they are definitely important for your exam. The correct answer for question number 1 is option number A. Now question number 2. Which of the following is not a qualitative character of accounting information? Qualitative, okay? Relevance, reliability, comparability, understandability, or quantifiability. What will be the answer for question number 2? All of you, please try to answer. Question number 2. What will be the correct answer for question number 2? Yes, if you see, every now and then they are asking this question, so we are solving 2 questions on qualitative characters: relevance, reliability, comparability, understandability, or quantifiability. The correct answer will be quantifiability because quantifiability does not come under qualitative characters. So relevance means what? That it is relevant for the time period. Okay, for example, in the year 2025, you will get the data of 2025 only, not of 1990s. Reliability, as I told you, you can rely on that particular piece of information. Comparability means that you can compare the statements of two different companies. Understandability means that the accounting information which is presented to you should be understandable enough. It should be presented to you in an easy manner, not in a complex manner. Right? So the correct answer over here will be option number E. Right? So the first two questions it looks easy to me, and I hope you would have also given the right answer for both these questions. Question number 3 is again testing your basics, that which of the following best represents the correct sequence for accounting process. Again repeating, the first 20 questions are from basic chapters, 4 basic chapters of accounting. Okay, so which of the following best represents the correct sequence of accounting process? बताइए. Please tell me question number 3 का correct answer. Please tell me the correct answer for question number 3. All of you, what will be the correct answer for question number 3? Read it and then definitely try to give me the answer. Please try to answer this question number 3. Question number 3 says what? Question number 3 says which of the following best represents the correct sequence of accounting process? Accounting process means a series of steps which will help you to complete the entire accounting cycle. Yes, so first you identify. Identify what? Identify economic events. Then you measure them in a monetary value. Then you record them in journal or in ledger. And then you communicate the same information to interested users. And these interested users can be internal or external. Internal are basically those who are working in the company. External are those people who are not working in the company. Right? So the correct answer over here will be option number C. Now these are very basic questions. If you are going wrong in these questions, then you have not studied accounting from basic perspective. Right? So the correct answer for question number 3 is option number C. Now let's start with question number 4. Question number 4 is quite based on a concept of accounting principle. So let's see who gives me the right answer for question number 4. All of you, please focus on question number 4 and I'm looking for the correct answers for question number 4. Please try to answer. All of you. I am expecting right answers for fourth one also. Salary for December 2025 is paid in the January 2026. It should be recorded as an expense in which accounting year as per the relevant concept. You also have to tell me the underlying concept for which you are giving the answer. What is the underlying concept running after this? Salary for December 2025 is paid in January 2026. It should be recorded as an expense in which accounting year as per the relevant concept. What is the relevant concept which is running? And by the way, I'm seeing your answers in my mobile phone, so please participate. Yes, salary for December, if it is paid in January, it will be recorded in the month of December 2025 itself. Therefore, the correct answer will be option number B. Now, there can be multiple relevant concepts which can match to the answer. One is matching, another one can be accrual also. Right? Matching and accrual both can work, but the most appropriate one will be matching over here, because you have to match the expenses of one particular year to the revenue of that particular year. But yes, matching and accrual both looks correct, but if I have to choose out of these two, then I will be choosing matching. So the correct answer will be option number B. Right? So this is all explanation which is given to you, which you can definitely read once you get the PDF. Question number 5. Question number 5. Is this financial or calendar? It can be any. Financial year ends on 31st March of that particular year. Calendar year ends on the December of that particular month. Question number 5. The analysis that is made to review and analyze the financial statements for number of years is known as what? Horizontal, vertical, cash flow, fund flow, or none of the above. If you are making a analysis that is made to review and analyze the financial statements for number of years, then it will be known as what? Please let me know your answers. Yes. If you see, horizontal analysis is also known as trend analysis. Right? It is also known as what? Trend analysis. In this, what you do, you try to put all the numbers of different years like financial year 10, financial year 11, financial year 2012, and you write the numbers accordingly. Right? And then you compare that whether my sales have increased, whether my revenue has increased, whether my expenses have increased or not. Right? So this is what number of years is the key term. In number of years, you do horizontal analysis. In vertical, you just pick 1 year and then you do the analysis of that. Cash flow has a different story altogether. Fund flow also has a different story altogether, wherein you see the application and the sources of fund. Cash flow tracks the movement of cash among the three activities. So that is not making any sense. So the correct answer will be option number A itself. Right? The correct answer will be option number A. Now moving to question number 6. Question number 6 says what? A firm reevaluate its building from 20 to 28 lakhs to show stronger financial health despite no sale of transactions. Which accounting principles are violated? The question is straightforward. A firm revalued its building from 20 to 28 lakh to show stronger financial health despite no sale or transaction. Which accounting principles are violated? Accrual. How come it can be accrual? 6B. Harshar is going with B. Abhigyan is going with B. Okay, I can see multiple students are going with B. Why not A? Why not A? Why only B? It can be A itself. E. Consistency and materiality. Going concern. See, going concern cannot be the answer because going concern says that your business will operate for indefinite period of time. Accrual and matching again is not making any sense because in accrual and matching you match the expenses or the revenue of that particular year. So C and D I should definitely eliminate. E also is not making any sense. So if you are confused between A and B, that's a valid confusion. But the correct answer will be option number B, which is realization and cost. Why cost? Because as per the cost principle, you should record the business assets and different I would say your property at a historical cost only. You should avoid the market price. So this business has done the violation of cost plus realization. Realization principle says that you should record the revenue as and when the right of realization arises. But in this case, nothing has been realized, right? There is no sale, there is no transaction itself. So why will you recognize 28 lakhs? Therefore, this is a violation of cost and realization principle. Yes, profit is not realized. That is also the correct way to explain this particular concept. So the answer will be option number B, which is realization and cost concepts both are violated in this particular principle. Right? So let's move ahead to question number 7 now. Question number 7. When faced with uncertainty regarding profit potential or loss, what should an accountant record according to this principle? Now the principle in this particular case you have to identify and then you have to answer it. You also have to tell me the name of the principle and then the accounting measure which we will do. What will be the correct answer for 7? Remember all the 100 questions which I have today are easy to moderate, which is the exact level of your phase 1 paper 2. Okay, we will do numericals also from the respective chapters of ratios, accounting standards and whatnot. But the overall objective is to provide you the standard of phase 1 paper 2. Chaliye, question number 7. When faced with uncertainty, yes, principle of prudence. Principle of prudence is also known as what? Principle of prudence is also known as what? Principle of conservatism. Right? And as per this particular principle, you have to avoid all the incomes and the future profits which you can get, but you have to play safe against all the different losses which you can have in the future. right? So for future losses, you have to play safe, but for future incomes, you have to avoid. Therefore, option number D looks correct over here, which is only anticipate losses. Anticipate losses means that you will try to make any buffer or any kind of provisions today itself and not unrealized gains, because unrealized gains will not affect your business, but but a loss can affect. So you have to play for the loss. You have to protect your business from the losses and not from the gains. This is what principle of prudence and what principle of conservatism talk about. So the correct answer will be option number D. Yes, very good. Those who are giving the right answer. Question number 8, a basic question on journal entry. I hope you know what different accounts we have. What are the different golden rules of journal entry? Right? The golden rule of real account, the golden rule of nominal account, the golden rule of, I would say, your personal accounts also, right? So I hope you are aware of the golden rules, and if you are aware, then you can answer this particular question easily. What will be the journal entry for the transaction? Goods sold worth 20,000 to Ramesh on credit. So if you are selling goods to Ramesh on credit, definitely sale is your income. So sale will be credited and Ramesh will become your debtor. So your journal entry will be sale, Ramesh account debit to sales. And in the 2024, in 2024, they have asked you journal entries also. So therefore, we are predicting that they will ask the same in 2025 also. But the level for phase 1, it will be easy to moderate only. Therefore, try to answer this particular question. The correct answer has to be Ramesh to sales, which is option number C. But if this is a cash sale, then if this is a cash sale, then it will be cash account debit to sales, because cash is increasing. An increase in asset is always debited. An increase in liability is always credited. I hope you are aware of the golden rules. Can somebody tell me their golden rule for a real account? What is the golden rule of real account? What is the golden rule of real account? I'm looking for your answers in the chat box. What is the golden rule for real account? A very basic question, and in PFRD Grade A Phase 1 2025 itself, they have asked you the golden rule for nominal accounts also. So likewise, they can ask you similar question in SEBI also. The correct answer for this will be option number C, which we all have solved. Yes, debit what comes in, credit what goes out. Very good. Question number 9, again based on journal entries. What will be the journal entry for the transaction? Owner withdraw 5,000 for cash for his own personal use, not for the business use. It's for a personal use. Yes, all of those who are writing debit what comes in, credit what goes out is correct answer. Very good. Question number 9. What will be the journal entry for the transaction? Owner withdraw. So owner generally, if he introduces the money, then we have the capital account, isn't it? But once he withdraws the money for his own personal use, then we have drawings account. Both are kind of personal accounts only because they are representing our dear owner. Right? So what will be the journal entry for the transaction? Owner withdraw 5,000 for cash. बताइए, D or B? See, drawings is a loss for a business because cash is moving out, right? So drawings account debit to cash. Why we are crediting cash? Because a decrease in asset is credited. A decrease in asset is credited. Therefore, option number D looks correct to me, because drawings account debit to cash will be the correct journal entry. But once the same owner brings more and more money in the business, then your entry will be what? If I just reverse this particular question, owner introduces 5,000 cash for the business, then your journal entry will be what? Cash account debit to capital, right? Cash to capital, right? I hope you know, because capital is a kind of a liability for you. So if there is an increase in liability, then you will credit it, and cash is also increasing. An increase in asset is debited. So these are golden rules of accounting. If you know them, then you can answer them easily. Right? So ninth ka the correct answer will be D. 10th, again a theoretical question. Bookkeeping is a wider concept in than accounting, narrower concept than accounting, same as accounting, not related to accounting, or none of the above. Yes, cash to capital. Question number 10. Bookkeeping is what? A wider concept, a narrower concept, or a same concept or not related to accounting, or none of the above? Bookkeeping. Bookkeeping is a part of accounting, right? Like in accounting, you have multiple different things, right? You keep your books, you analyze them, you communicate the information. So bookkeeping is definitely one of the part of accounting. And accounting has a larger, I would say, perspective as compared to a bookkeeping. Bookkeeping, you can just say, is a part of accounting. Accounting is more bigger because in that accounting concept you have communication also, analysis of transactions also, and whatnot. Therefore bookkeeping is a narrower concept as compared to accounting, and accounting will have a broader concept as compared to bookkeeping. Whatever way you want to understand, you can understand, but the correct answer will be option number B. Right, so we have done with the 10 first question. I hope you were able to answer them all correct. Question number 11. Which of these is not a limitation of accounting? Taken from chapter number 1, which is Introduction to Accounting. Question number 11. Which of these is not a limitation? Remember, I am asking not a limitation. So you have to give me the answer accordingly. Which of these is not a limitation of accounting? It is historical in nature. It ignores quantitative elements. It is not free from personal bias. It is affected by window dressing. What will be the correct answer for 11th? First answer which I'm seeing in the chat is Prakriti is going with B. 11th. Next, one more student is going for B. What about others? See, historical nature, yes, it is a limitation because of cost concept. We all know that we have to record our assets on cost. It ignores quantitative elements? No, it does not ignore quantitative. It ignores qualitative, not quantitative. Quantitative means numbers, but in accounts we do use numbers. So it is not a limitation. Therefore, the answer will be B. It is not free from personal bias. Obviously, in accounts, you can have personal bias and you can remove certain transactions from your business. So it is a limitation. It is affected by window dressing. Yes. What is window dressing, by the way? Window dressing basically means that you want to show your business perfect, strong. So you will use some false data. But the correct answer over here will be option number B because it is not a limitation. Right? 11th B will be the answer. Right? Question number 12. Chaliye. See, when the questions are easy, we don't have to waste too much time on it. Just answer and keep moving ahead. Which of the following statement is correct? Now you have to identify the correct one. Read all the statements and tell me your answer. Public, the general public, I mean, is not a user of accounting. Potential investors are an internal user of accounting. Suppliers of goods and services on credit are an example of long-term creditors. One of the limitations of accounting is that figures given in financial statements ignore the effect of changes in the price level, or none of the above. Which of the following statement is correct? The question is asking you to identify the correct one. Please let me know your answers. Which of the following statement is correct? Public is not the user. This does not make sense because public is a user, although it can be external user in this case. Potential investors are internal. No. Like today, if I invest my money in Reliance, I will be external, not internal. So B is also incorrect. Suppliers of the good services on credit are an example of long-term credit. No, short-term creditors. Right. So C is also incorrect. One of the limitation of accounting is that figures given in the financial statements ignore the effect of changes in price level. Yes, this statement is correct because in accounts you record everything on the cost concept. Right? So you will ignore inflation or deflation which is happening in the economy because for you cost matters the most, not the current market price. Therefore, option number D is correct and all the other statements were incorrect. Yes, I can see all of you have given the right answer, so kudos to your knowledge. Question number 13. Now, this question can be very easy for many people, but last year also in phase 1 they have asked you that which of the following is not a current liability. And this year also in PFRD they have repeated this question. So I'm just mimicking or I'm just copying the difficulty level of last year and for this year similar exam of PFRDA. right? Which of the following is not a part of current liabilities? Current liabilities are those liabilities which you have to dispose in less than 1 year, right? 13th A. Yes, in certain questions like this, you should answer it very quickly. Within less than 10 seconds, you should fix your answer, because if a tough question is there in your paper, then you have to go and solve that particular question. So save your time in certain easy questions like this. Which of the following is not a current liability? Obviously, option number A itself is not a current liability. It's a non-current liability, right? Or a long-term liability. Debentures, bonds, loans, all are what? All are my long-term liability or a non-current liability, because I have to pay them for like more than 1 year. So the correct answer will be option number A. Bills payable, trade payables, bills payable, all are your current liability which you have to dispose in less than 1 year. Bank overdraft, again you have to pay to the bank for a short-term loan in less than 1 year. Short-term creditors means that I have to pay to my creditors in less than 1 year again. So B, C, D are your current liability, but A is the odd one out and A will be the correct answer. Right? 14th, a good question to answer. Let's see who gives me the right answer for 14th. A junior accountant in a big Indian multinational company decides to omit paisa in certain figures and showed in the rounded off figures in the financial statements. A senior accountant agreed with the junior accountant in this respect on account of which particular principle? Full disclosure, going concern, conservatism, accrual, or materiality. I must say some students are very quick, which is good to see. The junior accountant in a big Indian multinational company decided to omit paisa in certain figures and showed the rounded off figures in the Indian financial statements. The senior accountant agreed with the junior accountant in this respect on account of what? Principle of full disclosure, going concern, conservatism, accrual, or materiality. Yes, materiality. Why? Because as per materiality principle, you only have to disclose all those stuff which is material and important. For example, if I run a company of crores and I am ordering one samosa of rupees 20, then I can, club this particular rupees 20 under miscellaneous expenses. I do not have to pass a separate entry of bringing one samosa in my company. This is materiality. Materiality means what? Only record the important stuff and do not record those particular stuff which are immaterial for your organization. Accrual we already know. Conservatism we have discussed under prudence. Going concern also we have discussed. Principle of full disclosure and transparency. These are also important. Full disclosure means disclose everything which is relevant. Transparency means that you have to be transparent and you will not hide anything which is relevant to the interested users. So my correct answer will be option number E only, which is materiality. So those who have given answer as E, very good. Right. Question number 15 now. The very popular double entry system is based on which accounting principle or concept? Double entry means what? Again the same system. Each transaction will have two-fold effect rather. One account will be debited, another will be credited. Now this particular principle is based on which particular concept of accounting? But paisa on lakhs of transaction can be thousands of rupees. Again, but if you talk about a company who is earning in crores, thousands also won't matter, right? Now, ifs and buts can be everywhere, but you have to use your journal mind to answer the question. Right? Question number 15. The very popular double entry system is based on what? C, matching. See, this is what I say. One student answered C's, like the first student who answered this is very confusing name. I'm not able to take pronunciation of it. The one student who answered as C is a student whose name start with S, S-A-T, and everybody just followed it. I don't know whether it's a kind of a herding behavior or what. How can a double entry system be based on matching principle? Explain this to me. Matching simply says that your expenses of that year should be matched to the revenue of that year. Or you can say revenue of that year should be matched to the expenses of that year, right? The correct answer will be none of the above, because double entry system is based on the principle of dual expect, right? So none of the none of the principle was working over here. Going concern is like indefinite future. Business entity says what? That business is different from owner, and we do accounting for business, not for the owner, right? Matching I have repeated twice. Prudence is conservatism. So none of them was the correct answer, and therefore none of the above becomes the correct one, because the correct answer will be dual expect, right? A kind of an easy question, but I don't know why many of you fall in the trap. And this is how easy question also becomes tough. Not an issue. Don't just follow the, like, do not follow the stream. Do not follow the herd. Apply your brain. Sometimes you can be correct, right? Question number 16 now. Chalo, back on the saddle. Back on the question number 16. Goods costing 40,000 sold at a profit of 20% for cash. Examine the effect on accounting equation. The question is quite straightforward. Goods costing 40,000 sold at a profit of 20% of cash. Examine the effect on accounting equation. Accounting equation is what? Assets is equals to your liabilities plus capital. Right. So if I'm selling the goods, definitely goods will go down. My assets will reduce by 40,000. But I'm selling them for profit of 20%. So 20% of 40,000 is 8,000, right? 10% is 4,000, so 20% is 8,000, and I'm selling them for cash. So I will get what? 48,000, isn't it? So my assets reduce by 40,000 because my goods are reducing, and my cash will increase, which is again an asset, by 48,000. And this 8,000 will also be added as my capital, because profit is always added in capital. So your capital will increase by 8,000. Overall effect on asset will be increase of 8,000, and your capital will also increase by 8,000. So my assets increase by 8 and my capital increase by 8, which is given in option number C. So my correct answer will be option number C. My correct answer will be option number C. Right? Why assets increase by 8? Because this is a net effect. Your goods fallen by 40,000, your inventory gone down by 40,000, but you are receiving cash of 48,000, right? So overall net effect is increase of 8,000 in asset, and the profit of this particular transaction will be added in your capital. So therefore we are adding 8,000 in your capital. So your capital increased by 8,000 and your assets increased by 8,000. Therefore the correct answer will be C. Right? Now, let's move forward to question number 17. Question number 17. Question number 17 is what? When the number of accounts to be debited or credited is more than one, entry made for the recording transaction is known as what? It is known as a journal entry, but what kind of journal entry? When you have more than two accounts to be debited or credited. Now see, simple journal entry looks like what? Cash to capital or cash to sales. This is a simple journal entry. But if I write cash to sales by to discount received, something like this, like I am making multiple accounts, right? Then this will be known as what? 17th B. Nikita is going with B. Yes, yes, Vipin, good morning. 17th B, multiple journal entries. Abhigyan is going with E. Ria is also going with B. Flash is again going with B. Yes, the correct answer will again be none of the above, because this is known as compound journal entries. Compound means what? More than one or more than two accounts are getting impacted. Like this is a simple journal entry, but this is a compound journal entry. Okay, compound के अंदर more than two accounts will be getting impacted. But in this case, only two accounts are getting impacted. So simple journal entry will look simple, but in compound journal entry, more than one, or you can say like the overall journal entry will be quite complex. Like over here, you can see two accounts are getting credited. Sales भी हो रहा है, discount receive भी हो रहा है, right? So therefore, this is known as a compound journal entry. So the correct answer will be option number E. right? And this happens when you club journal entries. Like you can pass two journal entries for different transactions, but if you club them, then these are known as compound journal entries. Like we also have contra journal entry. Contra journal entry is when your bank account and cash in hand both are getting impacted, like cash deposited in a bank. So you call them as a contra entry. Likewise, we have a compound journal entry. Very basic concept. I hope maximum of you have given the right answer. चलिए question number 18 now. Question number 18 says what? Which of the following represents the rule of nominal account? A very easy question. I'm not wasting my time. Nominal account basically says expenses should be debited and your income should be credited. So look for the right answer. Yes, option number A itself looks correct. Nominal account, personal account, and real account. You should be knowing their golden rules, because a direct question can be asked, because this is fundamental rules of accounting. So for 18, the correct answer will be option number A. Right, very easy, not wasting my time. Let's move ahead. 19. In Ramesh account, okay, so I hope you know that account looks like T, right? And over here you have debit and over here you have credit. The total of debit side is 25,000 and the total of credit side is 18,000. Find the balance and state its nature. Basically, you just have to tell me whether this account will be having a debit balance or a credit balance if I'm writing Ramesh over here. बताइए. And by the way, you make accounts in which particular book? Journal or ledger? What would be the correct answer for question number 19? 19th, Abhigyan is going with B. Flash is going with B. Okay. What about others? Others are waiting. Yes, it will be 7,000 debit balance. It basically shows that this particular person is a debtor for us because he has to pay us, right? So 7,000 debit balance is the correct one, and this is known as balancing in ledger. This is known as balancing in ledger, right? So I will write over here, by balance carried forward 7,000. Next year I will open my account of Ramesh by to balance brought forward 7,000, right? So this is known as balancing of ledger accounts. And balance is basically the side which is higher in number. In this case, 25,000, 8,000. So 7,000 is higher, right? So you will say that debit balance of 7,000 is there with Ramesh. So Ramesh has to give you 7,000 more, right? So answer will be option number B. 20. Last question of first set. Then we will change the set of chapters. Which of the following is the correct difference between reserve and a provision? Which of the following is the correct difference between reserve and a provision? Please answer. All of you. Question is straightforward. Which of the following is the difference between reserve and a provision? Reserves are charge against profit, provisions are appropriation. Okay. Reserve is created to meet a known liability, provision is created to meet unknown liability. Generally, creation of reserve is at the discretion of management. Provision must be made even if there is no profit. All are correct, none of the above is correct. What will be the correct answer for this? Please try to answer. Yes, the correct one will be C. See, reserve, like capital redemption reserve, journal reserve, you have multiple other reserves, right? Security premium reserves. These are at discretion of management. Discretion of management means what? That management will decide that what amount of profit we have to transfer into the reserves. If there are no profits, then in that year I will not transfer any money. But a provision must be made even if there is no profit, like provision for bad dates, right? So provision is basically made so that you can offset some losses in the future time. So therefore C is the correct one. A and B were not making any sense, right? C is the correct one. All of the above are correct. No, E is also incorrect, right? So reserve is basically based on the management decision, that yes, management decides to transfer some money in so and so reserve. But a provision becomes a kind of a compulsion, that I will have some bad dates in the business. It's a normal thing to have. So I will create provisions before. right? So provisions can be a charge against profit, but your reserves are basically, I would say, appropriation of profit, like distribution of profits. So C will be the correct answer. A is vice versa. B is not making any sense, right? So C will be the correct one for this particular question. Now, we have completed the first set from first to 20. We have covered 4 different chapters. Now from 21 to 50, which is next coming 30 questions, we are going to cover chapters like trial balance, bills of exchange, income statement, balance sheet, cash flow and ratios. Out of this set, ratios is by far the most important topic, which will definitely give you some expected questions in the exam. Now it can be theoretical or it can be a numerical also. Let's see. Question number 21. Chaliye, question number 21. Rent paid on 1st October 2020, or you solve it. I will keep myself mute right now. Solve it, because in accounts you will get questions, numericals I mean. Question is straightforward. You have to apply your brain. And over here it is clearly given. Rent shown in profit and loss for the year ended 31st December 2021. So this is a calendar year, not a financial year. 21. What will be your answer? Everybody please solve. If you are not solving, then you are fooling yourself. Because in accounts there will be numericals. So if you don't practice numericals, you are living in la la land of yours. Stop daydreaming. I'm looking for the correct answer. Rent paid on 1st October 2020 for 1 year up to 30th September 2021 was 2400. Okay, so 1 year is starting from 1st October 2020 to 31st December 2021. And I only have to do calculation of 31st December 2021. This is my end point. So in the first leg, wherein the rent is of 12 months, I will only take rent of 9 months only. Because in 2021, January to September will be counted, right? So it will be 2400 into 9 by 12. 2400 is the rent of full 12 months. But I will take the rent of 9 months only, that is January to September. Next, rent paid on 1st October 2021 for the year up to 30th September 2022 was 3200. But in the 1st October, November and December. So in this particular leg, 3200 is the rent for entire 12 months, but I will take only for 3 months. Right? So just add this 3200 into 3 by 12. Because we are only targeting 2021, right? So in the first transaction, 9 months will be taken. In the second transaction, 3 months will be taken. Try to solve what answer you all are getting. Try to solve what answer you are getting. Please try to solve. If you are not able to solve, then see the solution. The correct answer will be option number A. Right? Whatever I have done, 2400 into 9 by 12, 1800, 3200 into 3 by 12, 800. So if you add, your answer will come out as, I would say what? 2600. Therefore, my answer will be option number A. Right? And I can see hardly, very less people have answered it. Yes, the correct answer will be option number 8, 2600. Why? Because of accrual basis only, right? Like this type of question can come, so you have to use your pen and paper to answer it. Question number 22. Which of the following account normally shows a debit balance? Debit balance will be shown by all the expenses, all the losses which you are having in your books, right? Credit balance will be shown by all the incomes, all the revenues, all the profits, right? So try to answer question number 22. And this is as per the trial balance. In trial balance, you make trial balance. Pen is not working. Now it's working. So you make your trial balance like this only, right? You write the name of an account. Then here comes debit and credit. Then you balances it. So please tell me the right answer for 22. 22A. Yes. Which of the following account normally shows a debit balance? Wages. Wages is an expense, right? And it's a direct expense which is included in COGS. I hope you are able to connect with me. Sales is a revenue, right? So sales will have credit balance. Capital is a liability. All liabilities will have credit balance. All assets will have debit balance. Remember this. All assets will have debit. All credit will be your liabilities. Outstanding rent account, it's a liability, so it will have a credit balance. Purchase return. Purchase return. You are returning your purchases, right? So it's a kind of a not an expense for you, so it will have a credit balance. Purchase will have debit. Purchase return will be vice versa, right? So answer will be option number A only. I hope you are aware of trial balance because it's again one of the most important chapters. Next question 23. An error of posting of 5,000 to a wrong account but on the correct side will do what? You have done a posting error. The amount is correct, but you have posted on the wrong account. Error of posting of 5,000 to a wrong account but on the credit side will do what? Instead of rent, you have debited, let's say, cash. Instead of rent, you have debited cash, but the amount is correct. Just the posting is different. What will trial balance do? Will it affect trial balance? Will it leave trial balance unaffected? Will it create suspense account difference? Will it overstate over total liabilities? Or will it understate total assets? Yes, the correct answer will be B, leaving the trial balance unaffected. These type of errors are known as compensating errors. Compensating error means what? That despite of this particular error, my trial balance will match. Arithmetical accuracy of trial balance is matched how? It is matched as debit is equals to credit. Now because of this particular error, still this particular equation will stand true. Why it will stand true? Because just the names of account are getting replaced, right? The amount is correct, right? So certain type of errors are there which are called as compensating errors, and compensating errors will not affect your trial balance. But if I just say that instead of 5,000 I have done a posting of 500 in one account, then your trial balance will not match and you will come to know that you have done a mistake. And to rectify a mistake, you do rectification entry, and even if you are not able to do a rectification entry, then you use a suspense account, right? Overall story of trial balance goes like this only. Cool. So answer will be B. Next question, question number 24. Now you have to identify the type of an error. Like I can say with some amount of confidence that yes, trial balance pay, the different type of errors holds the most important topic for you. So do cover it up. And only three type of errors are there, right? Principal, commission, and your omission. So tell me, if wages of 5,000 paid for the construction, wages of 5,000 paid for the construction of building was debited to wages account. Okay, instead of building account, the trial balance still agree. Which type of error is this? Are you doing a commission error, omission, compensating, transporting, or error of principle? Which type of error is this? Yes, this is an error of principle. You are not concerned, you are not aware of the concept of revenue expenditure and capital expenditure. If wages on the construction of building has been given, then that will be debited in building account only, not in the wages account. Right? So this is a principal error. Your principles of account are not correct. Therefore, the correct answer will be option number E. Okay? Cool. Now let's move forward to question number 25. Question number 25. 25. Rent paid of 2,000 was wrongly debited to wages account. Rent paid of 2,000 was wrongly debited to wages account. Which of the following type of error does this represent? Commission, principal, posting, omissions, or compensating? Rent paid of 2,000 was wrongly debited to wages. Now error of posting is generally considered as error of commissions, right? Therefore the correct answer will be option number A. Those who don't know, error of commission is like laziness kind of mistake, clerical errors. These are those errors. My mind was occupied somewhere, so I have done a mistake, right? Your principles are correct, although you know the principles, but because of your laziness you have done a mistake. Error of principle basically means that you have done a blunder. Your principles of account are not concerned, right? So the correct answer will be option number A, which is error of commission, which is also known as clerical errors. Right, I can see. Right. Question number 26. A bill is drawn on 15 January 2025, payable after 2 months. What will be its due date? If you have doubts, then please ask. Question number 26. A bill is drawn on 5th January 2025, payable after 2 months. What will be its due date? Now, many people will do what? 15 January, 2 months. So it will be what? 15th of March? 15th of March. But if you have to calculate the due date of a bill of exchange, then you have to add how many days of grace? How many days of grace will be added if you have to calculate the due date of a bill? 3. Yes. So if you see, the correct answer in that case will be 18th March. 15 January plus 2 months will give you what? 15th Feb and 15th March, right? Plus 3 days of grace. So 16, 17 and 18. So 18 will become your correct answer. 18th March will be your correct answer, not 20th March. Right? And in this particular chapter, I hope you know that if the due date is on a public holiday, then it will be preceding or the next day. If you know the answer, do let me know in the chat box. 27. If a bill over here is your bills payable or bills receivable, right? Basically, it's a bill of exchange. To club it under one heading. Grace period of 3. Yes, very good. If a bill is payable after sight, when does the period of maturity start? A quite conceptual question which can confuse many. If a bill is payable, if a bill is payable after sight, when does the period of maturity start? Please tell me, if a bill is payable after sight, when does the period of maturity start? Looking for the answers for question number 27. Now there are different types of bill, right? Bill payable after sight, demand bill, usance bill and whatnot. But my question is specific. If a bill is payable after sight, when does the maturity period starts? Yes, a basic question. It starts from the date of acceptance. So drawer will make the bill, right? And drawee will sign the bill and accept it. The moment the bill is accepted, from that particular period itself, the maturity period will start. So the correct answer will be option number C. Right. Question number 28. Now we are shifting ourselves towards income statement. Which of the following is the correct formula for COGS? COGS, cost of goods sold. The correct formula will be what? Opening stock plus purchases plus your direct cost minus your closing stock. So my answer will be option number B. But the point of discussion which should be taken over here is direct cost. Can I say that office rent, manager salary, or let's say office expenditure done on administrative expenses, can all of this be added in direct cost? Can all of this be added in direct cost? Office rent, office expenses, administrative expenses, selling expenses, the salary of a manager. Can this be added to direct cost? Can this be added to direct cost? Please tell me. The answer is no. In direct cost, you will not add this. In direct cost, you will add all those things which are directly associated to the cost of production, like wages. Wages is added, salary is not added, right? Factory rent is added. Factory, I would say other expenses are also added if the word factory is written, right? So in direct cost, wages, factory rent, factory expenses are added. Yes, one more point of confusion. Carriage inward is also added. Carriage outward is not added. Carriage outward is a selling or an administrative kind of an expense. Carriage inward is something which you are paying so that goods can come into your business. So that becomes a direct cost. So my answer will be what? Option number B. Cool. Now we are moving ahead to question number 29. Which of the following is shown on trading account? Tell me what profit you get in a trading account, by the way. What profit you get in a trading account? Is it gross profit? Is it net profit? Is it your EBIT? Is it your profit before tax, profit after tax? Which kind of profit you will get if you are making a trading account? If you are making a trading account, what type of profit you will derive? Yes, you will make your gross profit. Gross profit is what? sales minus your cost. This cost is basically COGS only, right? So you get your gross profit. But is this the only profit? No, revise with me. Gross profit is sales minus COGS, right? But from gross profit, if you reduce your operating expenses, then you get what? Your earning before income and taxes. Then you do the adjustment of your non-operating income and expenses. You add your non-operating incomes, you deduct your non-operating expenses, then the profit which you get is your profit before tax. Then reduce tax, then you will get your profit after tax. Isn't this? This is the correct chronology of your profits. If it is hiding behind the banner, do let me know. I will write it again. But the correct answer over here will be sales. Because if you are making a trading account, you will debit all the expenses which you are doing, right? Opening stock, purchases, direct expenses, that all will come under debit. But sales will come under credit of trading account. So my answer will be option number D. Right? Cool. So my answer will be option number D. Question number 30 now. Question number 30. Question number 30. A machine costing 3 lakh has a useful life of 5 years and an estimated residual value of 50,000. What is the annual depreciation using straight line method? Now, if this question comes in your exam, you should not take more than 15 seconds to solve. This is a very easy question. If you are finding difficulty over here, then definitely it's a tough part for you. Question number 30. Depreciation. Depreciation journal entry is what? Depreciation to machine. Right. So, try to answer question number 30 now. 30 says what? A machine costing 3 lakh has a useful life of 5, estimated residual value of 50. So you have your value as what? 3 lakh minus 50,000, which will be what? 2 lakh 50,000 divided by the useful life, which is 5, which will come out as 50,000. So my answer will become as C. I can see many less students are participating when the numerical comes. Yes, this is a straight line. In straight line, can I say the value of machine can become 0? If I just follow the straight line method of depreciation, can I say the value of machine can become 0? Please tell me. Theoretically, only theoretically I'm asking. Theoretically, can I say that the value of machine can become 0? Please tell me. Can I say the value of machine can become 0 after applying straight line method? The answer is yes. But is this possible under your written down value method? The answer will be no. Now tell me whether this statement is true or false. In written down value method, in initial years, the depreciation will be lower, and in the later years, the depreciation will be higher. In initial years, the depreciation is lower, and in the later years, the depreciation is higher. Is this statement true or false? Just let me know the answers in the chat box. Question is straightforward. Question is straightforward. In written down value method, in the initial years, will I have lower depreciation? In the later years, will I have higher depreciation? Is this statement true or false? The statement is false because it's vice versa. In written down value, you have a higher depreciation in the initial years and you will have a lower depreciation in the later years. This is how written down value is different from your straight line method. In straight line method, depreciation remains the same. But in your WDV, written down value, you have higher depreciation in the initial year, but it reduces once the machine gets older and older. So yes, WDV looks more practical as compared to SLM, which is straight line method. The correct answer over here will be option number C. Right. Now let's move forward to next question, question number 31. Again, a very basic question. If your concepts are easy, if your concepts are clear rather, you can answer this under less than 15 seconds. Sir, I have done 4 out of 6 subjects. Yes, it's a good strategy because anyhow you just need to get 40 in paper 2. So just make sure that you clear paper 1, paper 2 and overall cutoff. Once you clear the cutoff, every strategy is a good strategy. Yes, very good. Percentage remains fixed in WDV. That is a correct statement. Calculate EBIT. EBIT is my operating profit. If gross profit is given to you as 3 lakh, If gross profit is given to you as 3 lakh, operating expenses is 120 and depreciation is 30. So your total operating expenses becomes what? 120 plus 30, which will be what? 1 lakh 50. Reduce it from your gross profit because your EBIT is gross profit minus your total of operating expenses. So my answer will come out as option number A. अब ये अगर आपसे solve नहीं हो रहा है, then you are not made for accounts. You have to study a lot. इससे easy question आपके एग्जाम में नहीं आना चाहिए. Right. Let's move to question number 32. Which of the following is included in the reserves and surplus? So now we are shifting our focus towards the balance sheet. I hope you know the format of balance sheet, right? The horizontal and the vertical format, whatever you have followed. On the first side, you have your shareholders fund, which include multiple different points like equity share capital. You have your preference share capital. You have your reserves and surplus. Then you have non-current liability, which includes your long-term debt. And then on the third point, you have your current liabilities. Fourth, which is on the asset side, you have your fixed asset first, and then you have your current assets. This is a simple way to understand balance sheet. Which of the following is included in the reserve and surplus? Yes, the correct answer will be share premium, right? Which is added to the share securities premium reserve, which is a part of your shareholder fund, right? Bills payable will be under current liability. Cash credit, like it can be under your asset also if you have given it. If you have received it, then it will be under current liability. Goodwill will be a fixed asset, intangible though. Outstanding expenses will be your current liability, right? So you should be able to have a basic understanding of what balance sheet looks like. Cool. Now, question number 33. Now, this is a good question. Try to answer this. And I need answers from everybody. Please try to answer question number 33. Question number 33 on your screen. A business has an opening capital of 50,000 on 1st April. During the year, okay, the owner withdrew 15,000 for personal use. At the end of the year, the closing capital was 1 lakh. What was the profit earned during the year? Please tell me the correct answer. A businessman has an opening capital of 50,000. Okay. During the year, he withdrew 15,000. So his balance should reduce to just 35,000. But the closing capital in this case is coming out as 1 lakh. So what is this amount which we have added? This is profit only. And the profit in this case will be what? Profit in this case will be 65,000, right? And which is not given in the option. Therefore, your right answer will be option number E, because the correct answer will be 65,000. 65,000 will be the correct answer, which is not given in the options. Therefore, answer will be option number E. Come on, why only few people are answering? What is happening to others? Not 75, right? 50 minus 15 is 35. 35 plus 65 will give me 1 lakh. So it will be 65, not 75. If 75 was correct, then answer will be D, which is not in this case. It will be option E. Okay. चलिए, question number 34 now. Question number 34. Now you have been given a liabilities of one particular balance sheet. You have to tell me the total of non-current liabilities. I need answers for this because this is again basics of balance sheet. बताइए, question number 34. 34 everybody, please try to participate. Please try to answer this question. All of you, please try to answer. Do not hesitate in giving the answers. Question number 34. A liability section reads like this. Trade payable, 10% debentures of the year, 5 years of 2 lakh. Outstanding salary, long-term bank loan is also given. Bills payable is also given. Short-term provision is also given. You have to identify the total of non-current liabilities. Non-current liabilities are your like long liabilities, right? Trade payable will not be added. Debentures will be added. Debentures are of 2 lakh. Right, this 10% is the interest on debentures which you have to pay. which we also call it as coupon. Outstanding salary is again a current liability. Long-term loan will be added, so it will be 1,50,000. Total bills payable will not be added. Short-term provision is a current liability. You have been asked the total of non-current, so it will be 2 lakh plus 1,50,000. Therefore, my answer will be option number A. 3,50,000 will be the correct answer. Good, everybody. Question number 35. Which of the following is classified as a free reserve in a company balance sheet? So we have multiple reserves, but now you have to tell me that which of the following is a free reserve. Which of the following is classified as a free reserve? Generally, there are two type of free reserves. You have to tell me what is the correct answer in 35. Yes, 35th. Capital reserve, securities premium reserve, revaluation reserve, journal reserve, or capital redemption reserve. Free reserve means what? That you can use the money of this particular reserve for multiple purposes. There is no restriction. It's a kind of a free bird. Yes, journal reserve. And there is one more kind of reserve which is classified as a free reserve. Can you tell me the name of that particular reserve? Yes, very good, Chandan. Retained earning reserves is also a kind of a free reserve which a company can use. So in free reserve, we have journal reserve and retained earning reserves which you can use for multiple purpose. Right? So the correct answer over here will be option number D. Very good. Next, 36. Which of the following sequence correctly represents the flow of share capital from highest to lowest in the terms of an amount? Good application based question. Try to take your time and answer it. Okay, I have got my answer because fundamentally if you see, paid up cannot be a top, paid up cannot be more than authorized. So you only answer, I will wait. What will be the right answer for 36? Yes, the highest capital to which company can do a business is authorized. Right? From authorized, some part will be issued. Some part will be issued. From issued, some part will be subscribed. From subscribed, some part will be paid up or some unpaid up. Right? In paid up also some part which is paid up, it is collected. Unpaid is your call in arrears only. Right? So this will be, what will be the correct answer? Yes, option number C. Because authorized is more than issued, issued is more than subscribed, subscribed is more than paid up. So my C looks correct. Tell me the name of that particular capital which I will only call up during the time of winding up. It is the part of capital which is not called. It is the part of capital which is not called currently. It will only be called up during the winding up of business. Such type of capital is known as what? Such type of capital is known as what? Please tell me the right name of it. If you are only calling that particular capital at the winding up of company, such type of capital is known as reserve capital. Right? Not capital reserve. Capital reserve is different. Reserve capital is the correct answer. Right. 37. Depreciation of 10,000 is charged on the machinery. How it will affect balance sheet? Basically, you have to again check the balance sheet equation, which we also call it as accounting equation. Assets is equals to liabilities plus capital. So you have to tell me if depreciation is being charged of 10,000 on a machinery, how will it impact balance sheet? Depreciation entry, I hope you know, depreciation is a non-cash loss. So depreciation account debit to machine. So definitely machine will reduce because you are reducing the value of a machine. If you are writing to machine, then it basically means you are crediting a machine. Machine has a debit balance and you are crediting it. So it basically means that you are reducing the value of a machine. So your assets will reduce. But what will happen on the, I would say, other side, which is liability plus capital? What will reduce? What will reduce? Yes, it will be option number B, which is decrease in asset and decrease in capital, because depreciation will reduce your profits also. And once your profit reduces, your capital reduces. Right? So kindly explain capital reserve and reserve capital. Capital reserve is a kind of a reserve which you use for some capital expenditure which you have to do, right? It's a kind of a reserve which you create. So some profit will be diverted into capital reserve. But your reserve capital is that part of a capital which you will only call up during the winding up. Because see, when the company is winding up, there will be multiple expenses which a company has to do. For example, I have to pay a person, I have to close all the shares and all that stuff. So certain part of the company capital is known as reserve capital, which you only call up at winding up. This part of the capital basically helps you to complete the expenses during the liquidation part of the company. But capital reserve has its own usage, right? Capital reserve, you can use it for multiple different purposes. So the answer will be option number B in this case. Let's move to 38. Let's move to 38 now. Which of the following is classified as a fictitious asset? Fictitious assets, I hope you know. What will be the correct answer for 38? Which of the following is classified as a fictitious asset in the company balance sheet? Fictitious assets are basically those assets which are not having any real sense. These are just written in the balance sheet for like capitalizing them for a number of years. You want to charge certain expenses a little bit in every year, but they don't have any real sense. They are not like your land and buildings. They are not like your machine. So which of the following is classified as a fictitious asset? Yes, preliminary expenses, which is option number E. These are the expenses which you are doing at the start of the business. So for example, to start a business, I have done GST. I have made myself registered with Government of India. I have given multiple XYZ expenses. All these will be capitalized in the upcoming years. So that is known as a fictitious asset, which is written in the balance sheet, but it does not have that much value with you, right? So therefore, the answer will be option number E. Why not A? Goodwill will have a value, right? Goodwill is an intangible asset. What is intangible? Something which you cannot touch. You can only feel, like the reputation of business. Reputation of business keeps on increasing if that business is doing good. So it cannot be fictitious. Fictitious is like naam ka asset. It is not giving any returns. It is not giving anything to you. Like for example, preliminary expenses. Can you make money from preliminary expenses? No, right? You have just written it in your balance sheet to write it off among the multiple years. So the correct answer will be option number E. 39. Yes, goodwill and patents both are intangible. Mining rights are also intangible. Which Indian accounting standard corresponds to cash flow statement under Indian accounting standards? Now, as per AS3, accounting standard 3 talks about cash flow, but the question is asking you regarding Ind AS. Question is asking you regarding Ind AS. Now, this is a factual question. If you know it, you can answer. Otherwise, you have to skip. Tell me which Indian accounting standard corresponds to the cash flow statements under Indian accounting standards. AS3, yes, AS3 is accounting standard, but the question is regarding Indian accounting standard. Yes, it will be Indian accounting standard 7. So it's like AS, which talks about Indian, I would say, accounting perspective, but your Indian accounting standards have been converged from International Financial Reporting Standards, which is your IFRS, which are like globalized concept, which is like more international investors will be able to understand Indian accounting standards because these are having a global compatibility. So Indian accounting standard 7 is the correct answer. And please remember those accounting standards which are there in your syllabus. AS2, AS9, AS10, AS11, AS13. These should be on your tips. Right? Now let's move to 40th. Question is straightforward, don't make it confusing. Dividend received by a non-financial company as per Indian Accounting Standard 7 will be called as what? Now in Indian Accounting Standard 7 also you have three activities, right? Operating, investing and financing. Operating, investing and financing. Question is asking dividend received by a non-financial company. Non-financial company means like simple company, a kirana store. Let's say a kirana store is receiving dividend. What type of activity it will be? Operating, non-cash, financing, extraordinary or investing? Yes, it will be an investing activity. Why? Because I have invested, now I'm receiving the dividend. But if I say it's a financial company, in that case, what will be your answer? If I say it's a financial company, in that case, what will be your answer? If I say it's a financial company, then it will be what kind of answer? Then it will be operating. But for non-financial, it will be investing only. So my right answer for this question will be option number what? E. Right? 41. 41. Again based on cash flow. Again based on cash flow. Non-cash transactions like bonus shares. In bonus, you don't collect any money, right? You just distribute shares for free. So a non-cash transaction like bonus shares will be shown under which particular category of cash flow? Operating, financing, investing, not shown or treated as extraordinary. Please let me know the answers of 41. 41 everybody, please try to answer it. Do not skip the question. Please try to answer, all of you. All of you, please try to answer. Yes, if the transaction is non-cash, then it will be not be shown in cash flow. A simple question, which will be option number D. Right. Now let's move to 42. An increase in trade receivable will do what? Increase in trade receivable. Now you have to know the relationship of current assets with cash, current liabilities with cash. What will be the correct answer for 42? If you have doubts, then please write in the chat box. Question number 42. Increase in trade receivable will do what? Increase cash, decrease cash, no effect, increase in profit, increase in equity. Sorry. Increase in trade receivable will do what? Increase profit. How it will increase profit? E. Decrease cash. Sales will increase. Trade receivable. Okay, so sales increase. So it can be a debt. It can be a bad debt also. Increase in trade receivable will decrease your cash. The question was basically based on the relationship of current assets with cash and current liabilities with cash. Now, if trade receivable are increasing, increasing, and increasing, it basically means that you are not receiving that much of money. So the immediate effect will be option number B. Immediate effect will be option number B, and you have to choose the immediate effect only. Right? So my right answer will be what? Option number B, which is decrease in cash. Because once the like see, if the trade receivable are increasing, increasing, and increasing, its answer is no. So therefore your cash will decrease. Right? Therefore your cash will decrease. So my answer will be option number B. Right? My, why it will increase cash? It will decrease low. An increase in debtors or receivable means more sale were made on credit. Cash was not received. And if cash is not received, then your cash definitely is getting impacted, which will decrease your cash in the cash flow statements. Right? 43. So next 7 questions are dedicated to, but the profit will also increase. I take your point, but profit is not the immediate effect. Profit is not the immediate effect. For example, increase in asset does not mean increase in profit. Right? So the question was specific. Specific as in that you have to identify the immediate effect. Like I cannot say that if assets are increasing, then my profit is also increasing. Profit is a different ball game altogether, which is cost. Your income minus cost. But with trade receivable, the question was checking the immediate effect. Immediate effect will be on cash only. Therefore, for this question, I can 100% assure you there is no point of any confusion. It will be option number B only, not of profit. Because profit has a different story and it might increase or it might not increase. There will be multiple cases, but definitely cash will decrease under the cash flow statement. So I will mark my answer as B only. 43. 43. Working capital is of 2 lakh and the current assets are of 6 lakh. Now we know working capital is nothing. It is a difference between current assets minus current liability. Current assets are given to you as 6 lakh. Okay. And working capital is given to you as 2 lakh. So your current liability will become 4 lakh, right? And what is current ratio? Current ratio is what? Your current assets divided by your current liability. Current asset is given to you as 6 lakh. Current liability you have calculated 4 lakh. 6 by 4 is 1.5. So my answer will be A. Tell me the desirable value. Tell me the desirable value for a current ratio. Tell me the desirable value for a current ratio. Like what is the ideal ratio for current ratio? Can I say a company who has a current ratio of 3 is to 1, a company has a current ratio of 0.5 is to 1. Which one is good? A or B? Which one is good? Yes, the ideal ratio is 2 is to 1. So in that case, B wins the race, not A. Right? And you also have quick assets. Can you write the formula of quick assets? Fatafat. Quick assets is equals to current assets minus what? There are two elements which will be deducted. There are two elements which will be deducted from the current assets to get quick assets. Can you name those two elements? Can you name those two elements? First is inventory and the second one is your prepaid expenses. Very good. And quick assets will be used in your quick ratio, which we also call it as asset test ratio. So your quick ratio is equals to what? Quick assets divided by current liability. And the ideal value of quick ratio is 1 is to 1. We have revised this multiple times. Okay, then you have cash ratio also. Cash ratio is cash plus cash and cash equivalents divided by current liability. All of this is like covered multiple times in the live classes and I hope you are very well aware of it. Cool. Yes, inventory and the prepaid expenses. Good, everybody. So my right answer will be option number A in this particular case. Next, what is debt to equity ratio? And by debt, I am making sure that you have to take long-term debt, not total debt. अब solve करिए. Debt to equity ratio from the following information which is available. So again, make a balance sheet if when the some information is available. Total asset is given to me as 35 lakh, which will be my total of liabilities also because asset has to be is equals to liabilities, right? Now, total asset is given to me as 35 lakh, or let's try to resolve it with a new approach. Try to solve this question now. I will give you time why I am solving. You have to solve, right? 44A. Quite quick. Please try to answer this. Please try to answer this. See, first you have to identify what is debt to equity ratio. Debt to equity ratio is what? Your long-term debt divided by equity. Equity is basically your shareholder fund. So now I have to get long-term debt. How I can get long-term debt? Total debt minus current liability. This is the only thing which is left, right? Total debt is given to you, which includes long-term plus short-term. Short-term debt oblique your current liability is given to you as 8. So your long-term debt will be what? 17 lakhs? Right? Equity you have to identify. Equity you can identify with accounting equation. Assets is equals to liabilities plus capital. Equity ko I'm writing it as like capital ko I'm writing it as equity. Simple stuff. So my asset is given to me as 35. My total debt is given to me as 25. So my equity will come out as 10 lakhs. So 17 lakhs divided by 10. My answer will be option number C. My answer will be option number C. Data inadequate. Wow. Ria is going with A. 25 by 10. Let me see the answer. It's C only, right? 7.1 is to 1. Why? Because my debt also came out as this. Total assets came out as total Equity came out as 10. So you have to divide 17 by 10, right? So it will be 1.7. So it will be option number C. I was correct. You also have to be correct. 44, the correct answer will be C. Let me see how many of you have given the right answer. Nobody. Only Sahil has given the right answer. What about others? Please practice, otherwise, how will you score? Question number 45 now. Question number 45. Please try to answer this question. Question number 45. Equity shareholder fund is given to you as 300 lakhs. Debt plus preference capital is given to you as 150 lakh. Seedha the question is asking you capital gearing ratio. Capital gearing ratio basically checks that how much amount of your capital is having a fixed obligation divided by your equity shareholder fund. Now, if you are not able to solve this, then you have not studied ratios. Please try to solve this question. Capital gearing ratio, I have told you, the fixed obligation capital will be written in numerator divided by your equity share capital. Now, preference also has a preference dividend which is fixed. So I will take 150 in the numerator, 300 in denominator. My answer will be option number B straight away. Right, straight away 0.5 is to 1. Right, and it basically shows that you are having low gearing in the company. Low gearing as in the sense like you are having less fixed obligation of capital to pay because your equity share capital is huge. It's almost the double up. Right, question number 46. I can see from ratios the participation has decreased a lot, so people are not practicing the questions of ratios, but let it be. Question number 46. A firm has a total sales of 10 lakh in a year, out of which credit sales is 80%. So your total credit sales becomes what? 8 lakh. You have to calculate what is debtor collection in days. What is debtor collection in days? So for debtor collection in days, you use debtor turnover ratio. Debtor turnover ratio is what? Your credit sales divided by your average debtors. Credit sale is given to you as 8 lakh. Average debtors is what? Opening plus closing divided by 2. So you have to do 1 lakh 50 plus 1 lakh 70 divided by 2 and then put the denominator uh, in this particular fraction. Please do it. 72. All of you are going with 72. Cool. Let's see the answer. Yes, it's 72 only. Credit sale is coming out as 8 lakh, which we have also done. Average debtor is coming out as 150 plus 170 divided by 2, which is 160. So your debtor turnover ratio comes out at was 8 lakh divided by 160, which is 5 times. This 5 times is the debtor's turnover ratio, which will be converted for days. So 360 we are taking as a standard. 1 year is equal to 360 days in an accounts. So 360 divided by 572 will be the correct answer, which is option number D. Good. Those who are able to solve this, good. Right. So 46 is done. Now we are moving to 47. The correct formula for current asset turnover ratio is what? Current asset turnover ratio. Current asset turnover. See, turnover we always take it somewhere around sales. So sales are divided by current asset will be the correct answer, which is option number A itself. In this case, you also have fixed asset turnover, net asset turnovers, you have your total asset turnover, all are taken on the numerator of sales only. Denominator will keep on changing, but your sales divided by current asset will be the correct answer for question number 47. Okay. Let's move ahead to 48. So you can get a numerical question also and a theoretical question also on ratio. So we are practicing both. Question number 48. If a firm has an operating expense ratio of 0.83, what will be operating profit ratio? Okay, so operating expense ratio is given. Operating profit ratio you can calculate directly. But they have also provided you sales, expenses and goodwill. Simple. You already know that operating expense and operating profit ratio, if you add them, then you will get 1, right? So one figure is available 0.83. So 1 minus 0.83 will give you as 0.17. So my answer will be option number C. Basically in this question, the sales, the prepaid expenses and the goodwill is given to you for confusing purpose only. As simple as that. Yes, therefore the correct answer will be option number C. 49. P ratio. P ratio basically is your what? Current market price divided by EPS. Right? EPS is what? Your net profit divided net profit minus your preference dividend divided by number of equity shares which are outstanding. So you should know these two ratios. These are very popular. P and EPS. Definitely very important concepts. Now a very high PE. A very high PE basically means that compared to the earnings, people are ready to give you a higher current market price. This basically means that the stock may be overvalued. Remember, we are using the word maybe, right? It can be because of optimism also, but we think that the stock is overvalued. So a higher PE ratio will definitely invite a lot of risk. Therefore, the correct answer will be option number B. Good, everybody who has gone with B. Now we are moving to 50th. Find the odd one out based on the basis of category. So you have been given 5 ratios. You have to find the odd one out. Gross profit ratio is gross profit divided by sales, right? Your operating profit ratio is operating profit divided by sales. Net profit is net profit divided by sales. Operating expense ratio is your direct plus your operating expenses divided by sales, right? EPS is a valuation, not a turnover ratio. Therefore, my answer will be option number E. EPS is a valuation ratio, right? Not mentioned on sales. So therefore, the odd one out will be option number E itself. So the correct answer will be option number E. So till now, if you see, we have covered half of the marathon. Is the marathon good? Please let me know in the chat box. Then we have to cover another half of the marathon in the next coming 1.5 hour. Are you all connected? Are you all enjoying this marathon? Please do let me know in the chat. Please do let me know in the chat. Is everything going good speed wise? Chandan is saying good. What about others? What about others? Harshal is also saying yes. Everything going good? Can we move ahead to next questions, which is 51 to 70 onwards? So the next 20 questions will focus on the accounting treatments of share capital, bonus issue, rights issue, buyback, and ESOPs. Right? Let's move forward. Let's try to move and solve question number 51. Let's try to wind up this session in next coming 1 hour because now the questions are kind of straightforward only. But yes, there will be some numericals. What is the maximum rate of discount at which a company can reissue forfeited shares? Once the company cancel the shares, if company is planning to reissue them, then what is the maximum discount which can be given? Although when company is doing fresh issue, you cannot issue at discount. But reissue of forfeited shares can be done at discount. The question is straightforward. Maximum rate of discount will be what? Yes, the amount forfeited on those shares. Very good. The maximum discount on the reissue of forfeited shares can be given up to the amount which you have kept in the forfeited shares. Right? So answer will be option number C. Very good. Next question. Question number 52. As per SEBI guidelines, what is the minimum percentage of the issue price that must be called up on application and the allotment of shares in a public issue? Remember, this is SEBI guidelines, not Companies Act. SEBI is saying differently, Companies Act is saying differently. We have to focus on both, but the question is asking you regarding SEBI. So as per SEBI, if you have to call up some amount on the application and allotment of the shares, what is the minimum percentage of issue price which you have to call? 5%, 10%, 15%, 25%, 50%. A, 5%. I can see Ria is going with D. Abhigyan is going with A. Uh, yes, very good. The correct answer will be option number D, which is 25%. As per Companies Act is 5. Right, but the question was specifically related to SEBI. The question was specifically related to SEBI. Therefore, the correct answer will be option number D. Okay, next is 53. At what rate interest is normally charged in call in arrears as per table F of the Companies Act 2013 unless otherwise stated in the AOA, which is Articles of Association. Question number 53. At what rate the interest is normally charged in call in arrears? Call in arrears is basically that I have not received the money. So company has the right to charge interest on it. What is the rate of interest which is mentioned in table F of the Companies Act? Please tell me the right answers. 10% per annum. Okay, so the first answer I'm receiving is option number E. What about others? D, 12% also. If you can also answer this question, in call in arrears I will tell you, but you also have to tell me in calls in advance. Calls in advance पे what amount of interest has to be given as per the same table F. As per the same table F. For call in arrears, the amount is obviously option number E only, which is 10%. But, please tell me in calls in advance, what is the percentage which the company has to give? In calls in arrears, I agree it's 10%, which is option number E. You have given me the right answer. But for calls in advance, it's 12%, which is 1% for every month. So for year, it's a 12%. Right? So remember, don't get confused. 12% is for calls in advance. For call in arrears, it's your 10% as per table F of the Companies Act. 54. In my admit card, my name spelling is printed wrong. Okay, this is a very big issue. First, you have to check, have you given the wrong input to SEBI? Like, was it the mistake from your end, or is it the mistake from SEBI's end? You first have to check this. 54. When the application money is transferred to share capital on allotment, the journal entry will be what? Now, over here, what is happening? That you are transferring certain money to share capital from the application stage, and this is all happening on the allotment. So, what will be the journal entry? 54A, 54C. See, it is a kind of a balancing which is happening on allotment. Allotment have not started yet. We are start to yet allowed. We are yet to start the allotment phase. But the question is asking when the application money received is transferred to share capital on allotment. The journal entry will be what? When the application money received is transferred to share capital, simply share application account debit to share capital. So answer will be option number A. We are transferring the money of share application to share capital. Whatever money we have received on the application stage, that we are transferring to the share capital account. Right? And this is all happening before the allotment starts. So my answer will be option number A. And this money will not be refunded because refunds will be made prior to this. So my answer will be A. Right? Question number 55. Amit, if the mistake is from SEBI, then definitely you can take this matter on the SEBI's authority, which is present on the examination center also. You just have to give a proof that you have done a right thing, but this was a mistake from SEBI's end. So just give a proof that will help you. I hope they will not they will allow you to give the exam. Question number 55. Very basic question. Try to answer it. For allotment, first you will make allotment due. For allotment, it will be like share allotment account debit to share capital, and then the money will be received for allotment. So then you will do bank account debit to share allotment. So there will be two journal entries which will be passed once the allotment starts. Okay. So first you make allotment due, share allotment to share capital, and then you make the second entry to close the allotment account because you are receiving money, bank account debit to share allotment. Right? I'm sure this is correct. Question number 55 now. 55. Come on. A company issued 2000 equity shares of 10 each at a premium of 5. The amount received on the application was 6, premium 1 included. What portion of application money will be credited to the securities premium account? Very basic question which they are asking. 55. Yes, the correct answer will be what? You are receiving 1 rupee in the premium. In total, application is of rupees 6. But out of that 6, 1 is for premium. So 1 into 2000 equity share will be 2000, which will be given into securities premium account. Right? Share capital will always be introduced with face value. But your securities premium account will be used for the premium which you have collected. Right? 2000 is the correct answer, which is not given. Therefore, answer will be option number E. 2000 was the correct answer, which is not given. So E will be the correct answer. Next, 56. Do understand the impact of bonus issue, rights issue, buyback on multiple different parameters of the company. चलिए 56 now. What is the impact of bonus issue on market capitalization of a company? If a bonus issue is happening, what will happen to MCAP? What will happen to MCAP? Market capitalization is what? Your number of shares into market price. Number of shares into current market price is your market capitalization. Right? So tell me, if the bonus issue is happening, what will happen to MCAP? Yes, it will not change. It will remain almost the same because number of shares will increase, but your current market price will reduce after bonus issue. Therefore, more or less your MCAP remains the same only. So answer will be option number C. This is a very fundamental concept and I am assuming that you know about it. 57 now. Chaliye, 57, everybody. No, it will not increase. It will remain same. The answer will be option number C, 56. Okay. 57 now. Which of the following will be reduced after bonus issue? And by the way, I hope you know bonus issue is what? Your capitalization of profits. It's a script issue. I hope you know the other different names also. In bonus issue, what you do? You issue the shares for free. You are not getting any money back, but you are just issuing the shares for free. 57. Which of the following is reduced after bonus issue? Share capital will increase because the number of shares are increasing. Free reserves, yes, they will decrease because from this particular reserve only you will issue the bonus shares. Basically, you will be using this particular reserve to do what? To do all the expenses, bonus issue, whatnot. So free reserves will reduce. Market capitalization won't change. Number of shares will increase. The question is asking about reducing. Total asset will not take any impact. Right? So one thing which will definitely reduce is free reserves. So my answer will be option number B. Let me see in the chat box how many of you are giving the correct answer. Yes, it will be B. 58. INDAI update. No update, Krish. Even we are waiting for INDAI. I don't know what is wrong, but this is how the regulatory body is. We have to respect their decisions. Right? So I don't have any update. But yes, according to some sources, some are saying that it will come in March or in the late of Feb. So this is an informal update which I have read on Telegram. But I have no concrete information. Chaliye, 58. I don't know why participation is reducing. Looks like questions levels is increasing. 58. If the Articles of Association already authorizes capitalization of reserves for bonus, the company must implement the issue within how many days of a board approval? Company must implement the issue of bonus issue within how many days? Straightforward question based on facts, right? Answer will be what? Yes, very good. It will be your option number B, which is 15 days. Now see, certain fact-based question can come from the chapters of bonus, buyback, ESOPs, and your foreign exchange transactions. Sorry, not foreign exchange, your share capital transactions. So be ready for this. You will definitely get a low-hanging fruit also. 59, my friends. If a shareholder does not subscribe to the right entitlements, his shareholding will remain the same, decrease, increase, get cancelled, or decrease. If a shareholder does not subscribe to the right entitlements, and yes, if the shareholder sells these rights in the market, then this is known as what? If the shareholder sells the right in the market, then this is known as what? Renunciation of rights. Right? I hope you are aware of it. 59. I'm looking for the right answers. Yes. If the shareholder does not subscribe to right entitlements, then his shareholding will decrease because new shareholders will come. Because new shareholders will come, which will lead to dilution. Which will lead to dilution. So my answer will be option number E. Right? Let's move forward to the last 40 questions. Maximum buyback permitted in a financial year through board approval route is up to what? Maximum buyback up to board approval route is what? Please let me know the correct answers in the chat box. All of you means all of you. Please try to answer this question. 60th. Maximum buyback permitted in a financial year by a board approval route is up to what? Board approval route, it's 10% if I'm not wrong, right? But through shareholders, by doing a special resolution, then what is the maximum buyback which a company can opt for? If I go for a shareholders route through special resolution, then what is the maximum buyback which I can do? Tell me the percentage. Tell me the percentage, all of you. Tell me the percentage, all of you. I'm looking for the answers. Yes, then in that case, it's 25%. Very good. Okay, but the question was clearly about board approval, so my answer will be option number B, which is 10%. 61. The debt to equity ratio after completing a buyback should not exceed what? 1 is to 1, 1 is to 2, 2 is to 1, 3 is to 1, or there is no restriction. There was a debate in the last weekly marathon which we have taken. So therefore, I have included this question specifically. The debt to equity ratio after completing a buyback should not exceed what? Please tell me the right answers. The debt to equity ratio after completing a buyback should not exceed 2 is to 1. So my correct answer will be option number C. Now these are factual questions, my friend. This is something which we have taken from Companies Act, SEBI's regulation and all that stuff. So there is no explanation in it. If you know the answer, then you know it. Otherwise, you have to skip it. The correct answer will be option number C, 2 is to 1. Right, 62. After a buyback, company cannot issue the same kind of shares for how many months? 1 month, 3 months, 24 months, 12 months, or none of the above. If let's say I have buyback equity shares, then I cannot issue the same kind equity shares again for the period of what months? Please tell me the right answer for question number 62. 1 month, 3 month, 24 months, 12 months, or none of the above? Shrishmat is going with D, 12 months. Okay. Ria is also going with D. Prakriti is also going with D, 12 months. Divya Lakshmi, Sadbir Loyle, Chandan, everybody is going with D. I will give you another chance to answer this. I will give you another chance to answer this. Those who are going with E, then answer yes. The correct answer will be option number E because it's 6 months. Right? Do remember, if a company has done the buyback of the same kind of shares cannot be issued for next 6 months. But there are some exceptions, but you can remember those exceptions or you can leave them. But this general rule you should remember that if you have buyback, then you cannot issue the same kind of instrument or same kind of shares for next 6 months. Therefore, the answer will be option number E. So only few were able to answer this. Very good. 63. What happens to EPS after buyback assuming profit remains constant? EPS we all know is net profit divided by your number of equity shares which are outstanding. Although net profit minus preference dividend hota hai, but I am assuming it is preference dividend is 0. So net profit divided by outstanding equity shares. So after you complete buyback, what will happen to I would say what will happen to EPS? Yes, different you can, but the same kind you cannot issue. Yes, simply because after buyback, your outstanding equity shares will reduce, right? Once the denominator reduces, the value of fraction will increase. So answer will be option number C. EPS will increase. EPS will increase. That will be the correct answer. Cool. Question number 64. As per the law, a company buy back its shares from all the following sources except what? A company can buy back its shares from all the following sources except what? A good question. Like these questions are small, but they can, trick you. Like what happened in that buyback question? Everybody was going for 12 months, but the correct answer was 6 months. बताइए क्वेश्चन नंबर 64 as per the law a company can buy back its shares from following sources except one. You have to identify that one. Yes, proceeds from the earlier issued of the same kind of shares. Very good. I was not expecting that you will give the right answer of this. Very good. Because see, if I'm doing buyback of equity shares, then I cannot use the proceeds which I have collected from preference shares. Okay, I can rather use it from preference shares but not from equity shares. Same kind नहीं होगा, different हो सकता है. So answer will be option number D over here. Question number 65. Question number 65. Basically, same nahi hona chahiye, but it can be different. Like equity can be bought back from the proceeds of preference shares. Preference can be bought back from the proceeds of equity shares. But I cannot buy back equity shares from the proceeds of equity shares. That kind of step is not allowed. 65. As per SEBI buyback regulation, a small shareholder is the one who holds shares worth not more than what value on the record date. If I have to classify somebody as a small shareholder, then tell me what will be the classification criteria for small shareholder. Everybody 65. Yes, it will be option number C. Tell me, is there any quota or is there any kind of quota which is allocated for small shareholders for buyback? Yes or no? Yes, the correct answer will be 2 lakh. So any shareholder who is having less than 2 lakh of shares will be classified as a small shareholder. Okay. Now moving forward to 66. You can let me know your answers of the previous question in the chat. I will confirm. 66. Under the Companies Act 2013, Form SH10 is used for following purpose for a buyback. Please tell me, under Companies Act 2013, Form SH10 is used for which of the following purpose for a buyback? Yes, very good. 15% quota. Very good, Harshal. 66. Question number 66 on your screen now. Question says Form SH10. See, if you do not remember all the form of buyback, it's okay, but Form SH10 and SH9 are very, very important. SH9 is for declaration of insolvency. From there, from SH9 only the whole story of buyback starts. SH10 is for what? SH10 is for maintaining the register of the bought back shares. Again, a very important form which all the companies have to maintain. So answer will be option number A. Very good. Those who are going with A, very good. And if you see declaration of insolvency is under SH9. These are very, small facts which you should remember. Chaliye, 66 is done. 67 now. Again a good question. As per SEBI buyback regulations. Now the question is specifically again focusing on SEBI, not on Companies Act. As per SEBI's buyback regulation, bought back shares must be extinguished within how many days of completion of buyback? जो शेयर्स हमने बायबैक कर लिए उनको पूरा खत्म कब करना होता है? This is what the question is. 67. Yes, 7 days. And as per Companies Act, what will be the answer? If I ask you as per the Companies Act, SEBI's it's 7 days, I agree. Okay, all the listed companies will follow SEBI's only. But as per Companies Act, it's 30 days. Okay, but as per SEBI, 7 days. 68 now. 68. Which of the following individuals is illegally prohibited from receiving ESOPs, Employee Stock Option Plan? Which of the following individuals is legally prohibited from receiving ESOPs? Uh, Please answer this question, everybody. All of you. Which of the following individual is legally prohibited from ESOPs? See, ESOPs cannot be given to the promoter of the group. So answer will be option number A. Answer will be option number A. Right? A very basic question, right? Right. Now, let's solve question number 69. Which of the following best describes the economic nature of ESOPs from an employee perspective? And can you also let me know the minimum vesting period for ESOPs? Minimum vesting period for ESOPs. Minimum vesting period of ESOP will be what? Please answer 69. On 69, I am also asking you the minimum vesting period. All of you, please answer. Which of the following best describes economic nature of ESOPs for an employee perspective? Guaranteed ownership, no, because it is a conditional offer for an employee. If he wants to take it, he or she can take it. So my answer will be option number B. A conditional right to buy the shares at a predetermined price. Yes, minimum vesting period is 1 year. Very good. And the answer of this question will be option number B because it's a conditional, not a guarantee. Okay, so answer will be B. Question number 70. Now this is the exact replica of PFRD grade A question which has appeared in phase 2 if I'm not wrong. So let's see if you are able to solve this. You have to record the fair value in the books of accounts of the ESOP. So please answer everybody, requesting everybody to give me the correct answers for question number 70. After this only 30 question remains. Question number 70. A company offers ESOPs when the market price on the grant date is 150. On the date of exercise, the market price is 160. What is the fair value of the option to be recorded in the books? All of you please participate. 70B, 40. How it can be B? A company offers ESOP at 120 when the market price on the grant date is 150. So company is offering ESOP on 120 and the market price on the date of grant is 150. It will be 30, right? Because you record the fair value on the grant date. So 150 minus 20 will be 30 only. How it is like A, B, what are you doing? See, when you are looking for fair value is taken on the date of grant. So grant date pe if you see the price was what 150 and ESOP is being offered at 120. So I will take fair value as 150 minus 20 which will be 30. Simple. So answer according to me will be option number C. Next, now we are solving next 20 questions. For these 20 questions, I have taken multiple accounting standards like AS2, AS9, AS10, AS11 and AS13. All of you ready? If you are ready, then write yes in the chat. If you are ready for next 20 questions, then please write yes in the chat. All of you, if you are ready, then please write yes in the chat. All of you, those who are ready, come on, I need full energy from you. Chandan is writing yes. What about others? Right. Let's start. Question number 71 is taken from the Introduction to Accounting Standards. Which of the following is correct and states the treatment of withdrawn of accounting standards in India? AS6 is merged into AS26. AS8 is merged with AS10. AS6 is merged into AS10. AS8 is covered under AS26. Both AS6 and AS8 are merged into AS22. AS6 is withdrawal without replacement while AS6 still continues separately. AS6 and AS8 are combined into a new standard. The question is asking you regarding AS6 and AS8, which are like not working right now and they have been merged into different accounting standards. AS6 by the way was for depreciation, and depreciation accounting standard has been merged with AS10, which is your property, plant and equipment. So even if you know this AS6, your right answer will be option number B. Your right answer will be option number B itself, even if you do not know what is AS8. Right? So the correct answer for 71 will be option number B. Right? By the way, AS8 is for research and development, which has been withdrawn, and its guidance is included under AS26, which is of intangible assets. Okay. Next question. How many accounting standards have been issued in India so far? The question is about accounting standards. 25, 27, 29, 30 और 32. यहाँ पे पूछा है issued. So you have to tell me the total issued. You have to tell me the total issued. Question number 72. How many accounting standards have been issued in India so far? Yes. In total, 29 have been issued. So your answer will be option number C. But as discussed, your AS6 and AS8 are not working right now. So in total issued are 29, but out of total issued, only 27 are active. So if the question is about active, then the answer will be 27. But if the question is about total issued, then the answer will be 29. Okay, and remember how many Indian accounting standards are there? How many Indian accounting standards are there? Roughly 41. Okay, so these all are like small stuff which you can remember. 73. Indian accounting standard 21 deals with what? Now they can ask you anything from the multiple accounting standards, but at least you should know AS2, AS9, AS10, 11 and 13. But AS21, which is also very popular, it is known for consolidated financial statements. So certain questions can come like this, which is easy, but if you don't know, then it will become tough. So answer over here will be option number B. Over here, the answer will be option number B. Let's move to 74. So we have a numerical to solve. Let's see who gives me the right answer for this. So now we have a numerical. I know very less people will participate in the numericals, but still I'm looking for the correct answer for 74. You have to calculate NRV, net realizable value. AS2, valuation of inventories. AS9, revenue recognition. PPE is AS10, foreign exchange transaction AS11, and AS13 is your valuation of investments. Remember these are definitely important for your paper. Question number 74 is on your screen now. Please try to solve question number 74. A company manufactures a product that normally sells for 500. Due to market decline, the expected selling price has dropped to 420. The product still requires additional cost of 30 to complete. The company will incur still as a selling and distribution cost. Based on AS2, what will be the net realizable value for valuation? Yes, you have to calculate net realizable value. Net realizable value is what? The selling price minus the cost which you have to still incur or to make it. So it will be 420 minus 30 to complete minus the expenses which you will be making. So 420 minus 40 will be 380. My answer will be option number E. And remember AS2, the fundamental line. Your inventories will be valued at a lower of cost or LRV, which is a net realizable value, right? The most important line in AS2 is this only. So your answer will be option number E. Question number 75. Which of the following is true regarding the formula for cost assignment of inventories? I should have written inventories also over here, but not an issue. You have to tell me as per The accounting standards, which of the following is true? FIFO and LIFO are permitted. FIFO and weighted average are permitted. Only specific identification is allowed. Standard cost is not allowed. Base stock method must be used. Yes. As per AS2, which deals with your inventories, you can only follow first in first out and weighted average method. So my answer will be option number B. I cannot use I cannot use LIFO, last in first out, but I can use FIFO and weighted average method. So my answer will be option number B, obviously. Right? My answer will be B. Cool. Chaliye. Now we have what? 76. Cost of inventories as per AS2 compromises of what? Cost of purchase, cost of conversion, other cost incurred in bringing the inventories to their present location or condition, or does it include all of the above? What will be your call on this? Cost of inventories compromises of what? Cost of purchase, cost of conversion, other cost incurred in bringing the inventories to their present location and condition, or all of the above. Yes, very basic question. 76D or C? Yes, the correct answer will be D, all of the above. Because cost of inventories will include your purchase plus conversion plus the other cost from bringing the inventories to their present location or condition, like carriage inward. Right? So my right answer will be what? Option number D, which is all of the above. Right? Now we have 77. Dividends are recognized when? Now we are moving to AS9, revenue recognition. Chaliye, 77. According to me, AS2 and AS9 are easy as compared to obviously the tough one, which is AS11 and uh, AS13 is also easy. AS10 and AS11 are big and tough also. Chaliye, 77. Dividends are recognized when as per AS9, revenue recognition. When you will recognize dividend in the books of account? Yes, as and when the company declares dividend. Very good. So answer will be option number E. Because once the company declares dividend, you have the right to receive it. Whenever the right to receive it arises, you will record your revenue. So answer will be E. 78. AS9 revenue recognition has been replaced by which of the following Indian accounting standard framework? A very important question. Please tell me the answer of 78. 78. AS9 revenue recognition has been replaced by which accounting standard? Please let me know the right answers. I can see many of you are going with AS23. Wow, surprisingly, only some students are giving the right answer. 78C, 78E. You are confusing me only. The correct answer will be Indian Accounting Standard 115. Now, these are factual things which you have to mug up, right? Indian Accounting Standard AS15 deals with recognition revenue from contracts with customers, which has a very big 5-step formula for revenue recognition. But remember, AS9 is accounting standard. Indian AS 115 is your global compatible Indian accounting standard. So the right answer will be C. A factual question which I can see many students have gone wrong. 79. Revenue from the sale of good is recognized when? A very basic question. This is the fundamental thing which you read under AS9. When you will recognize the revenue under sale of good? When will you recognize the revenue under sale of good? Everybody, please give me the answer. Yes, when risk and rewards are transferred. So answer will be option number C. This is the soul of AS9, right? Like soul of AS2 is what? The lower of cost or your NRV, right? Likewise, the soul of AS line is this only: whenever rewards and risk are transferred, you can recognize your revenue. Chaliye, next we have question number 80. Now we are shifting to property, plant and equipment, which is AS10, right? ABC company acquired machine for its production line. Okay. ABC company acquired a machine for its new production line. The machine was delivered on Feb 2021. Before putting it into use, an installation and testing performed by a certified technician is required. All the work, including test, were completed in April 2021. ABC launched its new production line in July 2021. Okay, so a lot of 2021 has been done. A company should start depreciating in machine in which particular month? So please tell me the right answers for 80th question. Question number 80th. Please answer, all of you. Do not skip certain questions like these. 80th B, April. All the work, including test, were completed in April 2021. ABC launched a new production line. No. A company should start depreciating the machine as and when it is ready to use. By April 2021, everything was able to, machine was good to go. So my answer will be April 2021 only. Company should start depreciation when the machine is available for use. And as per the information which is given to us, the machine was, all the test was completed by April 2021. Therefore, the right answer of this question will be option number B, which is 80th. I can see very less students are participating, and those who are participating, some are going with A, some are going with C. But remember, depreciation should start as and when the machine is ready to use. So my answer will be April. Okay, 81. A very basic question. Which of the following will be capitalized? And don't worry, we will do some numericals from the accounting standards also, but we are just touching the theoretical and the conceptual part right now. Come on, last 20 questions. I need full energy from your end. And I will give you last 3 questions for homework. We will solve it in the class only, but still, if you are able to solve it in your homework phenomena, then it will be good. 81. Which one of the following will be capitalized? Capitalized means what? That you will carry it for multiple years and you will write it off small amounts in every year to come. Which of the following will be capitalized? Overhauling cost, administrative penalty, repairs, regular service, and employee training cost. The correct answer will be option number D. You will only capitalize those expenditure which will increase the useful life of an asset. And therefore the right answer will be option number D. Right? Overhauling that extends life or enhances benefit is capitalized. Why? Because you will enjoy the benefit of this overhauling for multiple years to come. But certain expenses like routine repairs, these are just expense from profit and loss account. Right? So my answer will be option number D for the previous question. Question number 82 now. Come on, uh, last stretch of questions. Standby equipment should be recognized as a PPE only when it is used daily, it is expected to be consumed within 12 months, or is it necessary for operating a main asset that has multi-period use, has low value but high frequency of use, and is kept for emergency breakdown repair only. So you can recognize standby equipment, the like the alternative machine, as a property, plant and equipment only when it is necessary for operating the main asset. Yes, please solve. I will just take a 1 minute break and I will come. Yes, very sorry. I am back. चलिए. Now we have what standby equipment should be recognized as PPE only when it is necessary for an operating main asset and has multiple year of use. This is the most important classification which you should remember. That I will not recognize every standby equipment as a property, plant and equipment. I will only recognize the standby equipment when they are operating as a main asset, they are needed for a main asset and has multi-period use, which I can allocate it for multiple years to come. Therefore, the correct answer will be what? Option number C. Right, now we have 83. A company buys a routine serving repairs of 60,000. These spares will be consumed within 3 months. Now, this is the application of the previous question which we have done. What is the correct treatment? You only tell me. So if your concept of the previous question is clear, then this question becomes easy. Are we utilizing this particular repair service for more than 12 months, for longer year of time? No, right? We are just consuming it in 3 months. So it will not be categorized as my PPE. I will just add it to my P&L and I will just finish it off. Capitalized under PPE, amortized, treated as inventory and transferred to PLN when consumed, straight expense to PLN immediately, add to VIP. WPIP means work in progress. Please tell me the right answer. Yes, it will be option number C. Companies Act Marathon, when it is supposed to be. Companies Act Marathon will happen tomorrow, 3 to 4:30 p.m. So you have 3 marathons tomorrow. In fact, Ashima ma'am will take costing marathon, then Companies Act marathon, and then I will come with management marathon. Right? So answer over here will be option number C. Good, everybody. Chaliye, 84. A company allocates its factory to a new city and incurs 30 lakhs. As per AS10, this cost is done what? A company reallocates its factory to a new city and incurs 30 lakhs. Now, will this cost be added as a PPE? Will I add this particular cost into PPE and enjoy the benefits of capitalization? The answer is no, because this is not related to the like putting the machine up to use. This is another expenditure, like this is a administrative or another kind of expenditure. This is not related to PPE. So what is PPE? What falls under the scope of PPE? What does not fall under the scope of PPE? That becomes important for your exam. The correct answer will be option number D. You will expense it through P&L. You will expense it through P&L. This is not the part of PPE. Remember, government subsidies also, very important question. Government subsidies also is not the part of PPE. So what comes under PPE, what does not comes under PPE, the cost has to be remembered by you. Question number 85. Which of the following is odd one out under property, plant and equipment? Which of the following is the odd one out of top property, plant and equipment? Please tell me the right answers. Which of the following is the odd one out under property, plant and equipment? I can depreciate machine. I can depreciate plant, vehicle, furniture, but can I depreciate land? Have you seen the value of land going down? No, right? The value of land always appreciates. Although theoretically, yes, it can go down, but if odd one out comes, then definitely land will stand the correct answer. All these are fixed asset, by the way, right? Furniture, vehicle, plant, machinery, and land. All these are fixed assets. So you cannot say that based on fixed assets, I will try to answer this question. Land is a kind of an asset which is not depreciable because it keeps on increasing the value. Therefore, I will give my answer as option number E. Chaliye, now we have a numerical on 86. I need all of you to answer. I know it's quite tedious because we have solved a lot of questions, but let's solve it. A company purchases the machinery of $12,000 on January when the exchange rate is rupees 78 per USD. The liability remains unpaid on 31st March when the rate is 81 USD. So rupee has depreciated. USD has appreciated. Rupee has depreciated, right? So from this to this, and this is on 31st March. Okay. The company final settles the amount on 15th April on 84 USD. The rupee further depreciates and USD appreciates. What is the total exchange loss to be recognized? So you will recognize the exchange loss in two stages. First on the date of balance sheet and another on the date of, I would say what, on the settlement. So on the date of balance sheet you can see 78 से 81 हो गया है. So you booked the machine at $78, 78 rupees per dollar. But today it's like 81 rupees per dollar. So it has depreciated by rupees 3. So 12,000 into 3, this is the extra amount which you have to pay for the first year, for the first event, that is 36. And then from 81 it went to, I would say what, 84. Again, further depreciation of rupees 3 has taken place. So 3 into 12 again will be 36. So your total loss which you will book is 36 plus 36, which is 72. So my right answer will be option number C. So the total loss which you will book is 36 plus 36, which is 72. So right answer will be C. Good to see that many have given the right answer. 87. At initial recognition, a foreign currency transaction must be recorded using which rate? Question number 87. At initial recognition, a foreign currency transaction must be recorded using which rate? The exchange rate on the date of transaction. Initial recognition means the purchase. जब आप purchase करने जा रहे हो. So you will purchase it on the exchange rate of the transaction only. So my answer will be option number C. चलिए, do not lose your energy. Now we have question number 88. A company purchased 5,000 equity shares of the other company as a long-term investment at 120 per share, including a brokerage of 5 per share. So 120 में brokerage is included. At the end of the year, the market value of the share is 110 per share. As per AS 13, which deals with your investments, what value should be the investment must be shown in the balance sheet. So if you are buying the share at, okay, so this is an equity share and it's a long-term investment. Okay, I was about to do one mistake, but I have read this, that this is a long-term investment. Remember, as per AS 13, long-term investments, if there is any temporary fall, I will not pay any attention to it. I will keep recording my long-term investment at cost. I will keep recording my long-term investment at cost. So a company purchased 5,000 equity shares of the another company, the long-term investment at 120 per share. I will keep recording my 5,000 equity shares at 120 only. So 5 into 5,000 into 12 will give me 6 lakhs, right? Yes, because this 120 includes brokerage also, which will be added. So my answer will be B, not E. 88E. How E? It will be B, right? 6 lakh. I will not pay consideration to this 110 because this is a long-term investment. But if this is a current investment, then yes, I will take the lower of my current value and the cost. Answer will be B, not C. Okay, B for ball. 89. Brokerage was included, right? Brokerage was included 5 per share. This will be added in my cost of acquisition. So I will take it Sahil and Chandan also. Chaliye, 89 now. Brokerage will be included because it will be like it's a cost of acquisition which I have paid. Yes, it was including. Question number 89. A company purchased 20,000 equity shares on current investment. This time they have mentioned current investments, right, at 80 per shares. Brokerage paid was 2 per share. Now see, this time they have not said that brokerage is included in the price. So your total cost of acquisition is 82, which is 80 of price plus 2 of brokerage. At the end of the year, market value of the share is 75. As per AS 13, what will be the investment shown in the balance sheet? Please tell me. Now in this case, even you don't apply the basic common sense, even if you don't know the basic concept of AS13, even if you know that in the current investments you will record at the lower cost. So what is lower of 82 and 75? The lower is 75 only. Just do 75 into 2 lakh, which will be what? 150. So my answer will be D. D for Dholak or D for Dehradun. Okay. 89th will be D. You have to record at the lower of cost or fair value. Fair value is based on the price of the market at that moment. Okay, but in my long-term investments, I will be recording at cost only and I will ignore all the temporary. I will only take the permanent fall, not temporary. Chaliye, 90. The last question before we move ahead to the last 10. Question number 90. If investments are purchased come interest, this basically means that in your investments, interest cost is already included. Then the cost of investment is done as what? If the investments are purchased, come interest. Come interest means what? Interest is included. The cost of investment is net of interest component or total of amount paid, only interest amount, face value and market value. Yes, 90th B. This is again a factual question that you will not take any interest in the cost of purchase of a investment. Right? So finally we are now moving to last 10 questions from 91 to 100. Over here we have covered 3 chapters: final accounts, fund flow analysis and miscellaneous chapters which are left. Let's move ahead with full confidence. Let's try to complete marathon with full josh. 91. Schedule of changes in the working capital is the first step in the preparation of what? Cash flow, fund flow, comparative statement or common size statement. If I am making the schedule of changes in working capital, this is the first step in the fund flow statement. Very easy question. 91B will be the correct answer. 91B, B for Bangalore. Cash flow statement, the first thing is to calculate your overall operating profits, right? So how it will be your option number A. This is how a schedule of working capital looks like if you are making a fund flow statement. 92. The technique of studying the operational results and financial position over a series of years is known as what? Now this question we have also done in the starting. This is known as horizontal analysis. Horizontal analysis is also known as trend analysis. So my answer will be option number D. In horizontal, what you do, you put multiple years and then you compare them, right? This is what your trend analysis or your horizontal analysis is all about. So my answer for 92 will be option number D. 93. Which of the following is not one of the 6 main components of accounting information system? Right, this is a good question. Let's see how many of you are able to answer this. Use your basic sense. You can answer this. Use your common sense. Basic sense means the common sense. Use it and then try to answer. 93. Which of the following is not one of the 6 main components of accounting information system? Yes, even if you don't know marketing strategy, how it is related to accounts. So my answer will be option number D. My answer will be option number D. Okay, so you have software, data, people, procedures, information technology, and internal controls, which are the 6 very important pillars of AIS, Accounting Information System. Chaliye, 94. So 91 to 95 looks easy to me. Even if you use your basic sense, you can answer this. Which of the following is a source of funds in the fund flow analysis? Which of the following is a source of funds in a fund flow analysis? Source of funds means what? कि यहाँ से पैसा आ जाएगा. You will get money from these different sources. Purchase of machinery is an application. Redemption of debentures, again you have to use your money. Issue of shares is the correct answer because once I issue the shares, money will come in my business. You should not take more than 10 seconds to solve these questions. These are easy. Right? These are easy one. Cool. Now, let's move to 95. Which of the following transaction represents the application of fund? Application means कि यहाँ पैसा लगाया गया है. I have used my money in these activities. Issue of equity shares, as discussed, it will bring cash. Sale of fixed asset will again bring cash, right? Purchase of machinery for cash is an expenditure, so it's an application. So my right answer will be again option number C. All of you, C? Yes, agreed. Chalo, last 5 questions from final accounts or Schedule 3 of Companies Act. Schedule 3 of Companies Act does not apply to which of the following categories of company? Banking, insurance, electricity, all of the above or none of the above? Schedule 3 of the Companies Act does not apply to which of the following categories of company? Banking, insurance or electricity? Yes, the correct answer will be all of the above. Schedule 3, in which you have the prescribed format of income statement and balance sheet, does not follow to banking, insurance and electricity company because they have their other laws. चलिए 97 inventories are classified in schedule 3 under what? Inventories is obviously a current asset, right? It cannot be a non-current asset. And by the way, this is a previous year question. This is a previous year question. Okay, the answer will be current assets. The answers will be current assets. Good. 98. Which of the following is a contingent liability as per Schedule 3 of the Companies Act? Contingent liability as in like I will have it in future. Right now I'm not sure that whether it will be my liability or not. In future it can be. Calls in advance, bills receivable dishonored, capital work in progress, claims against the company not acknowledged as a debt. Yes, this will be the right one. D1. Claims against the company but not acknowledged as a debt right now. So answer will be what? Option number D or E. Proposed dividend is never a contingent liability, bro. So answer will be D. Now 99, all of you, chalo. Which of the following is shown under other current liabilities in Schedule 3? Other current liabilities. Long-term loans will obviously be your, I would say what, non-current liability. Share warrants is not a liability, obviously. It's a part of equity share capital. Deferred tax asset or E. Like you can be confused between D and E. What is your answer for option number, for question number 99? 99E. Yes, current maturities of finance lease. Finance lease means long-term lease. If you have covered alternative sources of finance, there are two type of lease, operating and finance. Operating is short-term, finance is a very long-term lease. Yes, so if that particular long-term obligation is maturing in one particular year, that will be another current liability which I have to pay. Last question before we wind up. Money received against the share warrants is shown under which main head of the balance sheet? Last question hai, I need everybody's answer. Money received against share warrants is shown under which main head of the balance sheet? Money received under share warrants. It is, see, anything which is related to share will be under shareholder fund only. So my answer will be option number A, even if you apply your basic sense. Right? And warrants you understand in your finance class along with options. Cool. So that completes our overall marathon for today. I hope you enjoyed it and all the very best for your paper on 10th of January. I know that you will do good. Many students have given many right answers and I hope you enjoyed this particular workshop. If you still have any doubts, you can ask me in the chat. Otherwise, let's conclude our session. Tomorrow you will have 3 marathons of costing, Companies Act and of management. Be there with us on YouTube channel of EduTap and you will definitely enjoy all the 3 marathons. That's it. I hope you enjoyed all the marathons which are being conducted on EduTap YouTube channel. Can this marathon be sufficient? No. In marathon we have just discussed the tip of the iceberg. There are multiple more concepts. Okay. Chaliye. So if there are no doubts, then let's wind up the session. I hope you enjoyed this. Bye bye. Have a great day ahead.